Okay, good morning, everyone. Thank you for joining me for today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you all today. So today we have not too much to go through. Of course, the main highlight for today is going to be the Canada retail sales that are coming out later at 3:30. And we are going to expect to see some nice movements there on the USDCAD pair. We're also just going to go through the US dollar to find out how it is faring against other currencies, and also just to go through any other updates that we might have to go through. So let's begin. So we have this article here from ING, and I just wanted to get some insights for comparative purposes. Some insights on how the dollar is doing and how we can expect it to do. Now, of course, as some of you may not be aware, right now we are now coming close to the highly anticipated US election, which of course is scheduled to take place on the 5th of November. But of course, voting has already begun in some particular states in the US, and now I would say we are now within the election. We are now in the election period now. So this article is talking about that dollar's rally may only be on pause. So it's saying here that the dollar lost some ground yesterday on a correction lower in treasury yields, but upside risks from the US election persist. Donald Trump's seemingly strong momentum should translate to higher implied volatility and a supported dollar, first due to his policies. I'm sure most of you, as we'll be able to discuss in some of the other FX Pesa events we have scheduled for you. Donald Trump, of course, his policies with wanting to tax imports, and of course also increase tariffs on some of on certain countries like China. All that should likely translate to a strong dollar, and of course that's how the market is currently perceiving a Donald Trump victory. Now, we're also saying that the election result may also have implications for the ECB's decision on whether to cut 25 or 50 basis points. Now, let's also take note that on the same week that we're going to have the US election, we also have the FOMC meeting. They're going to be meeting they are going to have a series of meetings which begin on the 4th of November. Then, of course, their final meeting will be on the election day, which is the 5th of November. And then on the 6th of November, we have the FOMC conference. So let's take note that that week actually of November, there are a lot of things happening in that week. You have the election, and then you have the FOMC meeting. So we are really going to get a lot of volatility within that time, and there are several opportunities ahead. Now, Donald Trump's seemingly stronger momentum should translate to higher implied volatility. I think I've already spoken about that. So ING is saying here that the loss of momentum in the dollar rally we saw yesterday doesn't seem to be the beginning of a broader trend. US yields are probably due to an adjustment lower after the recent treasury sell-off, and that was mainly behind the slight dollar softening. Looking at both the US macro and political dynamics, the greenback could continue to find good support for the next few days. So some of the fundamental reasons why we've been having a strong dollar over the past, I would say for the bigger part of October, has mainly been on the stance that we have seen the MPC members from the Feds mentioning. They say that they are now going to move more consciously with cutting rates, and this has translated to a strong dollar. We have also seen that in addition to that, we have also seen the dollar strengthening on the economic data. So the NFP numbers we got, for the month of September were strong. We got a number of 240, 200, I think 50,000. Very, very strong jobs number. And the ADP number was also strong. A series of other data like the inflation also came in moderately stronger, a very firm inflation, and all that has translated to a strong dollar. And in addition to that, you also have the risk aversion that's currently taking place, where we are seeing people moving their money from risky places, and they're putting their money in money markets, especially in the US money markets, which of course are enabling us to see a relatively strong dollar. So all those factors are playing a part. But of course, if you look at things on the chart, if you look at the chart around this time, the last time we had the election, the dollar seemed to have found a bit of resistance within November, towards the end of October, but starting of November. So between now and possibly maybe mid-November, we should see the dollar having a bit of failure to continue upwards. But then again, this same article, and of course, generally, as we are seeing in the markets and what people are saying, or analysts are saying, is that If Donald Trump comes in as the winner, or if he passes the 270 electoral votes before Kamala Harris, then it could enable us to see a very strong dollar going into 2025. So now, of course, the implication on that is that you would ideally then see some struggling for buying on things like GBPUSD, Euro USD may struggle to buy, but of course, it's all speculation. We can't know for certain until we actually get to that stage where the election comes. Now, regarding the euro, the ECB has also been a bit outspoken regarding cutting rates. However, Lagarde, in the previous ECB meeting that they had, the previous conference, she refused to 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 say that they are on a political policy, they are on a specific policy path. She has said that they are still going to decide based on oncoming data. This is despite already 3 rate cuts that we have had so far this year. So it's obvious that they're also trying to they're also trying to cut the rates and to normalize the rates lower. Now, the euro is also having a bit of hard time to buy, obviously because of a strong dollar, but also, like I said earlier, the stance of Trump wants to increase tariffs on certain regions like the EU and also China. So that is going to have a very hard time on the euro, but it will also support the dollar. So traders are anticipating that a Trump victory could possibly enable us to see a strong dollar against other currencies. Yeah, but again, guys, this is of course speculation. We can't know for certain until Trump actually wins, or if he doesn't win. So the euro currently is trading slightly above 1.08, as you shall see on the charts there. And of course, it's having a bit of a tricky time to break higher, but we need to keep observing to see what happens to it. One thing, of course, is for certain that the euro is also very firm where it is. I don't expect it to sell too much, especially since Lagarde in the previous conference indicated that the eurozone is not going to get into any kind of recession. Despite us seeing some growth concerns, it's likely that the euro will stay firm. Yeah, but of course, there is that element of risk that is coming from the US election. So, Bank of England, of course, if we look at the pound dollar is doing relatively stronger, despite us having, yesterday we got some PMIs. The PMIs actually were a bit weak, slightly weak, not too weak. So, which means, the UK also, things are looking relatively good over there. Now, looking at the economic calendar today, we have the retail sales data for Canada. They're going to be released today at 3:30. Um, we also had the Canada interest rate decision on Wednesday, and I listened to the conference. Now, the Bank of Canada has cut rates. They have cut rates 3 times. 25 basis point, 25 basis point, 25 basis point. Now, on Wednesday, they cut the rate for the 4th time, but it was a jumbo rate cut, a supersized rate cut of 50 basis points. But despite that rate cut, the USD card has, or the Canadian dollar has stayed relatively strong. Now, that's simply because some of the remarks we got from the Bank of Canada governor, he indicated that they are going to act on that. Their next rate cuts will be purely data dependent. So they have not really, I would say, committed to cutting rates further than that. So I think that is supporting the Canadian dollar, and it's likely that we could see the Canadian dollar strengthening, possibly going into the end of the year, despite the rate cuts. Now, today we have the retail sales data, and the main currency pair to trade based on this data would be USD CAD. So I know some of you like trading the cross pairs, the what, but the best pair to trade, the one that responds greatly to Canada news, is USD CAD. So you should give it more focus than the other currency pairs. So for the retail sales data, the main focus is on this one here, the month over month, and we're expecting the number to decline from 0.9% to 0.5%. And of course, if we do get that decline there, then I'm expecting us to see a sharp move higher for USD CAD. And of course, if the number comes in low, stronger, then we are going to see USD CAD possibly selling. So it's as simple as that. Now we have this, and then of course we also have the retail sales year over year. where we're expecting the number to decline from 0.9%. Rather, we're expecting it to increase from 0.9% to 1%. So I would say the forecasts are mixed. For monthly, we're expecting a decline, but for yearly, we're expecting an increase. So if we get increases on both fronts, that would imply that we would see a strong Canadian dollar vis-a-vis other currencies or relative to other currencies. And of course, if the monthly and the year over year come in higher, then we shall definitely see, rather lower, then we shall definitely see a weaker Canadian dollar relative to other currency pairs. All right, so let's now cross over to the DXY. We're not going to take too long on today's snapshot because I want us to focus on looking at how the DXY is doing, and then we shall also have a look at gold, see how gold is doing, and then we can prep for next week. Now, looking at the DXY, currently we have gotten a bearish engulfing on the daily, which is very, very good. Again, it faced a bit of a hurdle yesterday after it failed to break this level of 104,551. And of course, at the moment right now, the DXY seems to have found a bit of temporary resistance. Now, when you look at the DXY structure, you can clearly see its structure is actually bearish. And of course, despite us having a recovery from this demand zone that the DXY held from December 2023 previously and now September, we are still not convinced that the DXY could move to the upside. Now, aside from the speculation around Donald Trump becoming a president and then having his policies, it's all speculation because Donald Trump has to, you know, how someone takes power or someone, a new president comes and has campaigned that he's going to do certain things, but when he takes power, he doesn't do those things. So there's going to be a lot of, you know, a lot of things are going to come that could affect how Donald Trump possibly could maybe increase tariffs on imports, or maybe make it hard for other countries to sell their produce to US, which would of course support the dollar and all these things. So all that I would say is speculation. Now that's one hand. Now on the other hand, if you look at it on fundamentals, also you have the Federal Reserve also cutting rates. So take note that the rate cut cycle that the US is in right now is a rate cut cycle where the central bank is going to ease. They're going to make credit cheaper by by cutting rates, by making the benchmark rate lower and lower. So that translates into a weaker dollar. So now, then also if you look at how the DXY did, I think we spoke about this the last time we met for the snapshot. If you're looking at the same period uh, as uh, as we are in right now, would ideally be focusing on how the DXY did in November 2020, which is that we actually saw a weaker DXY around November. It was weak, but the sales began around the time of voting. So in 2020, the election was on the 4th of November. It was a Wednesday, and we actually saw the DXY selling from around this level here all the way down. By the time we entered New Year's for 2021, the dollar was all this way down here. Okay, now fast forward to where we are at the moment. Uh, there are two similarities between that period and this period. Aside from them being election periods, you also have the same rate regime. The same rate regime, we are saying that then the central bank of the US, the Federal Reserve Bank, was cutting rates, okay? And now they are also cutting rates, okay? Now, the pace of cutting could differ in certain aspects, but the idea is that they are cutting. So now there is an impediment to stronger dollar if you're taking that into perspective, okay? Now, we just have to keep observing to see whether the DXY manages to break here. If you're trading Euro USD, definitely Euro USD, we are starting to see a bit of recovery. It's currently looking quite bullish, Euro USD. It's trading 1.08344. And of course, all that is because of the weakness that we are starting to see in the DXY. So what is likely going into maybe next week is that maybe we could attempt to see a higher low that could be created. Uh, And of course, if the DXY, if the DXY follows maybe something like this, possibly this and then this, the moment we have the higher low created, then we shall know that now the bearish structure is in, because ideally how it would be completed, it would be maybe something like this, and then this. Okay. So now the bearish structure would be us attempting to make a break of structure to move back up, but it doesn't happen. Instead, we see the DXY possibly now making a new wave to the downside. Now, um, ideally, when you look at technical trading or technicals, we have first of all a bearish engulfing. That's one. Secondly, we're also seeing that the structure previously to this rally here was a bearish structure. If we look at it on the fundamental side of things, there's little that is supporting a stronger dollar. Okay, aside from the risk aversion things, and of course the potential Donald Trump policies, we are seeing little affecting a strong dollar. So we just have to keep observing to see what happens there. Now, when you look at the Euro USD, let's just go to it quickly. Now, for Euro USD, Euro USD has a bit of an order block at this level here. Okay. This order block here was ideally the level that we discussed actually a lot with clients, the level where I would be anticipating a potential move higher for the euro. Okay. Previously, on the 1st of August, we actually saw a very sharp rally for Euro USD from this zone. And we're also seeing it now also starting to buy from this zone. Now, in terms of economic data, I would say there's not so much that is supporting a weaker euro at the moment. We had PMIs yesterday. The PMIs did little to sell the euro, and we can already see the grab on liquidity that is taking place from this order block here. So this level is going to be interesting to watch for the euro. If we fail to sell beyond this block, the euro is going to make a sharp recovery into the new year that could possibly see us trading around 1.14. So this is actually a very, very nice level for positioning on the euro. Now, looking at the pound dollar is also holding very, very nicely. If you're to do a bit of deep analysis on it, you'll notice that the rally we had for the pound around the month, I think it was of September, ideally what happened for the pound is that the pound rallied more than the euro. Okay, the pound rallied more than the euro, and that's why we're also seeing it struggling to sell. On Wednesday, when you got a sharp sell, okay, I think this was Wednesday, the pound did not sell as much as the euro. Okay, it actually sold slightly. It was a sell, I think, of about almost like I would say it was under 200 pips, a very, very small sell. Let me see, let me do the math here quickly. Yeah, that was about a 40 pip sell. That was a roughly almost 40 pips, 50 pips sell around there. Now, that was a very, very small sell. Okay, meaning that there is some inherent strength for the pound, and it's very likely that the turnaround is anytime from now. If we do base our analysis on what happens towards November, we tend to see a relatively stronger, relatively weaker dollar. So that means that the pound could start recovering from here to possibly trade higher. Now, if you look at gold, as you know, I'm sure most of you find gold quite amusing with its price action. But of course, what I would say is that gold is favoring mostly buyers than sellers. Okay, it's favoring mostly buyers than sellers. And of course, if you look at how gold did around this time when we had the previous election, we also saw a very, very bullish gold. There was a bit of a sell for gold. I think let's go to 2020. There was a bit of an initial sell, and then after that sell, we then saw gold actually rallying. Okay. Ideally, we're focusing on yeah. So this was the 6th of November. So 6th of November, 30th of November. Let me see, 24th things. Okay. Yeah. So this was what we had. So we had this. Um, we had this initial sell for gold. Okay. And then the 29th of November to the 10th of November, there was a sharp buy. And then on the 9th of November, we saw gold crashing down. Now, in many aspects, the gold we are dealing with now is very, very different from the gold of 4 years ago or 5 years ago, especially since there are a lot of fundamentals that have taken place. Then, of course, we had what was it? We had the COVID-19, and then of course now we have the Russia, rather we have the Israel Iran, and then we also have gold being it's now a reserve asset after after the Basel III regulations were revised. It's now a reserve asset, and central banks actually supposed to hold gold. And we're actually seeing there are many central banks buying gold. Even Bank of Uganda is actually buying gold. So how to trade gold for now? I would say we need to look for buys on the retracement. So at the moment, I'm not seeing a really clear setup for gold, but my interest would be how gold fares if it comes back to this zone. But also, we can already see that gold has already created a lower high around here. Okay, that was the peak. Then, of course, now we have the lower high there. So it almost seems as though now it might attempt to have a bit of a sell. Okay, before possibly we see it trading higher. But then again, um, gold is very bullish. So if you're selling gold, you need to be quite delicate with how you're selling it. Relatively tight stop loss, because the trend is not favoring any sellers. The trend is favoring mostly buyers, especially those who are able to grab it from you see, like for instance, like here, this was a very good trade. We got it from around here. Within this demand zone, there was a very, very strong rally for gold. Grab on liquidity here, held structure very nicely there. Then of course we saw a higher highs, and of course now we saw it moving. So right now it seems like it has found a bit of resistance, and it has also created a lower high, which could mean that if we break structure here, we could potentially see gold having a downturn that could possibly send it maybe below these areas here. Yeah, so that's what I'm seeing for gold at the moment. And yeah, so that's pretty much about it, guys, for today's snapshot. If you have any questions now, I believe we can go over them. All right. So as we keep our eyes on our markets, I would like to brief you on a few things to look out for with FX Pesa. As you wait for the highly anticipated US elections, we will be releasing a bullish banter episode as the boys discuss what could happen to the markets after the presidential candidate is crowned victorious. That will be available on YouTube, Spotify, and Apple Podcasts at 2 p.m. So, guys, don't miss out on that. Don't miss out on FX Pesa's Bullish Banter podcast, which is going to be available for you to watch. This is a very, very important podcast because it talks about the presidential elections and the implications of the election. So don't miss out on it. Secondly, we also have a Twitter space on the US elections, trading insights on the US elections, and that is also going to be available on FX Space's Twitter. So make sure you do not miss out on it. The day for that is the 29th of October, 2024. Time is 5 p.m. So do not miss out on that on that event as well. I'll be joined by several other people like Prudence, Rufus, Robert, and Nadia, and we shall be providing you insights, trading insights about the upcoming US election. So I hope to see you guys there. Right. JT, good morning. You're asking about AUD card. AUD card. Do I have AUD card here? Let me see if I can pull it up for you. Just a moment. So for AUD card, ideally, we have the upcoming retail sales. So you might want to keep an eye on that one. Okay, the upcoming retail sales. AUD card, AUD card. If I have it here. Okay, so let's just have a look at it here. AUD card, that's a currency pair. So for AUD card, I'm seeing already relatively choppy price action. I honestly do not know how you guys trade these cross pairs. I find it quite hard trading cross pairs, unless maybe if I'm swing trading. Cross pairs are quite there's really too much happening on them. There's too much noise. If I'm to ideally look at it on a bigger time frame, I see there is a bit of confusion here, no clear trend. But if I'm to add, of course, using my moving averages, immediately I can spot that we're in a steady uptrend here that is about to switch to a downtrend. We're having structure looking bearish on the H4 with lower highs. So if I add this is of course a bearish structure. That's one. And of course, we're already seeing that there is a bit of resistance here now. This looks like a falling wedge. Okay, this looks like a falling wedge. So this is a potential setup for a buy. If we do, however, get strong retail sales data this afternoon, Jetty, I hope you're following. If we do get strong data, retail sales data, this is going to spell a sell for AUD CAD, possibly toward that zone. But this falling wedge, if this pattern is complete, then ideally we should be looking for a buy. So right now it's majorly going to depend on the retail sales data, and retail sales normally moves the Canadian dollar a lot. So keep an eye out for that and see how you can navigate that. Okay, next question. Yes, Apollo. Yeah, I think we went through this sometime, Apollo. I don't really want to get into the details of this, Apollo, but we went through this. I think there's a snapshot. You can look for the snapshot. I think maybe I will see if I can get it for you and share it. The International Bank of Settlements revised the Basel III, and they reclassified gold, so you can check that when you get some free time. So now gold is held as a reserve asset everywhere around the world. Central banks are buying gold, and even Bank of Uganda has a purchase program for gold. So that is one of the key fundamental reasons behind the rally that we are seeing on gold. Yeah. Wangari, you're saying other currencies before their respective central banks cut rates. You've seen investors factoring in the cuts. USD has been pretty strong when Fed cuts. When Fed cuts next, and looking at the elections, can you expect a sharp USD sales? No. Like I said, guys, there are so many factors at play. Most of them speculative factors, and others, I would say, concrete factors. If you look at essentially how the dollar fares with this particular factor in play. Now, the one that's most important, or the primary factor, is the path that the Federal Reserve is going to take. Okay, if the Federal Reserve actually continues cutting rates in a steady pattern at every single conference, then we are definitely going to see a gradual sell on the dollar. However, some people have been saying that a Trump victory could ideally spell a stronger dollar. Okay, because Trump's policies would ideally help the U.S. economy to thrive. Better trade balance, more exports and less imports, since of course the tariffs are going to be increased for certain regions like the Eurozone and China. And we are going to discuss all these things in a Twitter space. I don't really need to get into that now. So when you join a Twitter space, you'll get all that discussion. But I would say, Patrick, for us to focus on one thing, the most important thing to focus on would be how the Federal Reserve is going to move with its rate cuts. Now, of course, if you look at the DXY, and of course, again, I don't want to go back to what I'm just from taking you guys through, but we say that around this time, into the month of November, we typically see a weaker dollar, and of course, that is because of the elections, printing money. There's a lot of money printing, and of course, even the rate cut cycle. So ideally, that will gradually enable us to see a weaker dollar. In spite of all the other factors, we'll definitely see a weaker dollar. Yeah. Maybe the other thing, we have the NFP. Don't forget the NFP. Constantly strong economic data would ideally make it very hard for the dollar to have a hard time selling. We need to get a weak NFP number. We need to get a weak GDP number. We need to get a weak retail sales number. So if we don't get these, then I think it's going to be a hard time to see that dollar selling. Yeah. This sharp sell we saw around August, you guys recall very well. The NFP numbers during that time were not good. We had a very weak NFP number, very weak retail sales number. The ADP numbers came in weak. So the dollar really faced a hard time. And now this time around, it's different. Yeah. So it's going to be a gradual sell. It won't be immediate. Gradually, maybe by January, February, we shall gradually see the dollar losing its strength. Yeah. All right. I think that's it. I don't know if you have any other questions. For Zoom classes, I think the link is in the description. We have classes at 11 a.m. and 8 p.m. The 11 a.m. classes are mentorship classes, and then the 8 p.m. classes are for beginners. Yeah, so you can pick which one you need to go for. All right. I think that's it. Guys, thank you so much for joining me for today's episode of Market Snapshot. And please do not miss out on every single all these different events that we have lined up for you guys. Again, just to reecho what I said about the Bullish Banter podcast, it's going to be released soon. Do not miss out on it, guys. Otherwise, I wish you guys all an awesome Friday, and we meet again next week. Cheers, guys. Yes, Apollo. It's happening after the election. Yeah, the FOMC. That's spot on. Yeah. Cheers.